Good morning. Welcome, everyone, to the Buying a Home in the Netherlands webinar. Maybe some household remarks. This session will be recorded and shared with you, so no need to take a lot of notes. I am joined today by my lovely colleague Ludo and our lovely business partner from Mr. Mortgage, Robin, and we'll share a little bit more about ourselves in a few. We're going to talk about us a little bit to begin with, of course, a proper introduction. We're also going to talk about renting versus buying, and of course, the cost to buy a home. Sorry, I'm a little bit out of breath, like I'm running here, and tips to win. And of course, we'll answer all the questions that you have. Pop the questions in the chat or in the Q&A, and then Ludo will be in the back supporting with answering these questions. If there's any questions remaining at the end of the presentation, then we'll be happy to answer them as well. So before we start, let's get to know you. We've listed a few questions for you guys. That helped us already get a little bit more information about you so we can tailor make the presentation around you. Let's see if you can all see it. I've opened up the poll. Let's see if you can answer those questions. We'll wait a minute and then we'll move forward from there. So where did you find out about us? The webinar, how old are you? What does your household look like and what made you decide to buy? Of course, we're also interested to learn more about where you would like to buy. Cool, we're seeing the answers come in. The website of VHN, Facebook, a lot of you coming from Facebook, Instagram, a friend or a colleague, the newsletter, and other means. That's great. We have a lot of people between 25 and 45, so that's a good amount. No really young people or relatively older people. The majority of you are a couple, a few singles, and several families as well. What made you decide to buy? The rents are too high, which is understandable, and you would like to settle, which is nice, and build up equity. That's also great. It's a nice bonus of actually buying a home. The majority of you are looking for a place in Amsterdam, then The Hague, then Haarlem, and we have a lot of others as well. We didn't list all the cities, so just pop the city in the chat and we can see where you guys are looking to buy a home. Cool. Thank you for sharing that. We have a few more polls later in the presentation. But first, let's dig in. Let me first share a little bit more about the team of Expat Housing Network. I believe greatness is achieved in the agency of others. So if you decide to move forward with one of us, you'll be dealing with either one of my colleagues. Ludo is in here today, but we've got a lot of great other colleagues as well that you might work with in the future. By the way, I never really introduced myself. My name is Kimo. I'm from Expat Housing Network. I'm the founder of Expat Housing Network. And I used to support people with buying a home, but now my team has got so much more experience with it than I have. So I've gladly handed over to them and given them the keys to the castle. Some more information about EHN. We're not traditional real estate agents. The majority of us don't have like a proper background in real estate. What we do have is a lot of support and a lot of love for the clients that we work with. And of course, by now, tons of experience as well. We help with buying and renting. We don't offer selling services. That means that we can actually focus on helping you buy a home and are not distracted by landlords that want to sell their properties. Because at the moment, it's a seller's market. So if we were to deal with two types of clients, then most naturally we'd probably gravitate to the easier deals. But in this case, we've decided let's focus on buying homes, and we've become quite good at it as well. We charge a fixed fee. We'll talk a little bit more about that later. And we know what it's like to settle into a new country. If you looked at the previous slides, the majority of us have either lived abroad or are from abroad. Ludo, for example, has lived in the US. And honestly, I'm the only one that has never lived abroad yet. So that will happen one day. What is the added value of Expat Housing Network? Selling agents take our offers more seriously because they know that we've done due diligence. We can sometimes book in viewings when it's no longer possible. And we support by reviewing Dutch and legal property documents. And of course, we help define the market value. I'll talk a little bit more about that in a few. We'll inform you about the rules and regulations, and we'll make sure that you don't make the same mistakes that I made when I began. When I began or not begin, when I bought my own home, which is about 5 years ago. It took me 7 offers before I got my final offer accepted. Well, we weren't in the business of helping people buy a home back then yet. But had I known then what I know now, oh, things would have looked so much different. So we're going to make sure you don't make those same mistakes that I made. Happy after though, because I'm happy with the house that I bought in the end, but just to be sure. Robin, how about you and the team?
Yes, good morning. Thanks for hosting again, Kimo. I'm glad to be here. And this is the team from Mr. Mortgage, where I'm joined by Cesar as a financial specialist. We guide you through the whole process of buying and financing a home. Obviously, the guys from Expat Housing Network are the experts in finding the property and negotiating. They will tell you everything you need to know about that, and we'll take care of everything financial in the financial administration, that is. And we're joined by Egle, our Lithuanian growth marketer, and does a remarkable job of getting us out there. And of course, Uskan, our other financial specialist, or how we like to call him, our mortgage Google, if you will. He used to work as an acceptor at a variety of banks. So he has seen everything. So every little rule, every little regulation or terms or conditions with any bank, he knows. So if we want to know something, if there's any extraordinary situation, we can always go to him because he's seen it all. So that's a very nice backing to have to, well, take care of your mortgage application, of course. And we're focused on expats and internationals in our client group. So we've seen all of that as well. And that's what allows us to give you the proper advice and guidance through this process. It doesn't need to be rocket science. I don't want to downplay my job, but it's the most important thing that you know your way around the maze that can be a mortgage, and just to make it as easy as possible and to give you the correct information where you can base your choices on. So that's what we do. We work with a variety of banks, over 35 now, I think. We're independent from anybody and everybody, so we have our only focus point, which is you. So we can always find the best option for you at any specific time and place. So that's what gets our blood pumping to take care of that. And we love working together with Expat Housing Network, because that's a match made in heaven to get you the best option there is.
Perfect. Thanks. Great to have you, Robin. Ludo, maybe you'd like to introduce yourself briefly as well.
Sure thing. So my name is indeed Ludo. I am a buying manager at Expat Housing Network. So I will actually be your point of contact when it comes to finding your home, but especially in securing your home. I'm also a lot in contact with Robin to make sure that process is streamlined. So I look forward to meeting you all during the coming intakes.
Perfect. Thanks, guys. So today's goal is to add value to you. We believe in sharing information freely. What we try to do is create a presentation that answers a lot of the basic and general questions, some specific questions. Of course, if you have any further specific questions, pop them in the Q&A. And Ludo will try to answer the majority of them, if not all of them. And of course, if there's some left at the end, we'll be happy to answer them as well. If you feel that the questions that you have might take a little bit more time, then don't hesitate to book in a free intake with us. No strings attached with either Mr. Mortgage or with us. So don't hesitate to do that. What is good to know? Several different things. I'm going to talk a little bit about the National Mortgage Guarantee. What is this? This is kind of a insurance for you. Let's say you buy a home, and something were to happen. Maybe you lose a job, maybe you lose a limb, maybe you lose a partner, God forbid. But let's say that happens and you won't be able to pay off your mortgage anymore. You'd have to sell your house. But the house that you bought for the amount of money, let's say you bought it for 300,000 euros. But when you sell it, you only sell it for 250,000 euros. Maybe there's a little dip in the market. Then there's a deficit, of course, between what you have as a mortgage and what you get in return for selling the house. Well, if you have the National Mortgage Guarantee, that is covered. However, there is a rule. The value of the property when you buy it cannot be more than 325 this year and 355 next year. So let's say you buy a property for 370,000 euros, but you get it valued and you get the mortgage for 355, then you are actually able to apply for National Mortgage Guarantee. This number will increase on an annual basis because it's linked to the actual general values of properties in the Netherlands. So that is definitely good to know. Robin, maybe you'd like to share a little bit more about transfer tax.
Sure. So usually or regularly before 2021, if you bought a home, you had to pay 2% transfer tax. Anybody had to do that. If you bought for yourself or if you bought it as an investment property, that didn't matter. Always 2% transfer tax. That's the baseline. Now, as of 2021, for one, if you buy an investment property, you have to pay 8% transfer tax. But if you just buy it for your own purpose, so to live in as your personal residence, sometimes you don't have to pay transfer tax. There's an exemption there. The ruling is if you buy a house within in the time span of 2021 until 2025, so up until the 31st of December 2024, and you're under 35 and you buy a property for no more than 400,000 euros purchase price, then you don't have to pay transfer tax. This situation that you can see on the left here with Kate is single, under 35, purchase price 400,000 euros, therefore 0% transfer tax. Now there's a couple of other options, of course. So what happens if you're a couple and one of you is over 35 and the other one is not? Then the person that is over 35 has to pay 2% transfer tax, as the ruling dictates, but only over 50%, because only 50% of the property is yours. So then you only pay 2% of the half of the purchase price. The other one doesn't have to pay transfer tax, so therefore over the other 50%, no transfer tax is due. Now, when there's the situation where, for instance, here Kate and John on the right, both 33, but Kate already bought an apartment this year, so within this time span of 2021 to 2025. So she already bought a property, already got this exemption. So if she buys a new house then within that time, then she does have to pay that 2%. Let's say John didn't, then he still applies can still apply for that 2% exemption, so he doesn't have to pay that. Now you can see on the bottom right, visit the transfer tax checker. There's where you can actually state your situation and see if you have to pay transfer tax. And obviously, as Kimo already mentioned, if you have any questions about it, feel free to just reach out and check in with us personally to see if this applies to you. It will definitely be part of the calculations we make when we set up your mortgage options.
Perfect, thank you. Again, this presentation will be shared, so then you'll be able to actually click on the link of that button. We're very curious to, of course, also know where in the process you guys are. So another quick poll, 3 questions. Where in the process are you? And did you chat with an agent yet, or did you chat with a mortgage broker yet? We're very curious to know that from you guys. So a lot of you are still in your orientation phase researching. Some of you have actually started viewing properties already. Has anyone made an offer or got an offer accepted? I'm curious. Not yet. Okay, that's good, because that means that we have a bigger chance of adding some. Hey, somebody, 2 people have their offer accepted. Congratulations, well done. Let's see if we can still add some value to you guys in this presentation. Again, if there's specific questions you have, pop them in the Q&A and make sure Ludo doesn't fall asleep. Cool. Did you chat with an agent yet? The majority have not chatted with an agent yet. And the majority of you have also not chatted with a mortgage broker yet. That is good. For the people that have chatted with an agent or with a mortgage broker, I'm also very curious to find out what added value you'll get from this webinar today. We're of course going to ask you what you thought of the webinar at the end of the presentation. But thanks a lot for sharing your thoughts and answers. So we're going to talk a little bit more about renting versus buying. Robin, take it away.
Yes, am I unmuted? I think so.
Yeah, I can hear you.
Yes, very good. So renting versus buying. So when we look into your financial situation, we are called Mr. Mortgage. It doesn't mean that we want to push a mortgage on you. We want to know if it makes sense in your financial situation, of course. And there are some perks to renting your property, for instance, or to rent your home. So for instance, you have flexibility. You can state to your landlord or landlady, I don't want to live here anymore, and then usually you have this notice period of 1 or 2 months, and then you can move. You don't have to sell the house, and that saves you a bit of hassle there. There's no taxes or maintenance to pay or to take care of. That will be taken care of by your landlady or lord. So that's also something you don't have to pay. There's also no significant down payment required. Maybe a security deposit, but that's not in the same realm of amounts when it comes to buying your property. Because when you own your property, you can see it right there, you do have to pay taxes. There is a maintenance that you have to take care of, and it can be harder to move. Now, obviously, it's a seller's market right now, so it doesn't need to be that hard to sell your house, but it's still something that you have to take care of. So those are downsides of owning your home. Now, if you're still interested in buying your home, which I think you might be, granted that you're visiting this webinar, these are the perks of owning your own home. And that's the other side from flexibility. There's stability, of course. You have stability when you own your own home. Nobody can just kick you out because they want to sell the house or something. That you're obviously you're protected when you rent your house, but when you own your home, you have that stability. The monthly payments that you pay interest, but also you repay on your mortgage. Therefore, you build up equity. That means that the money that you repay on the mortgage will be yours again when you sell the house. So that's the equity that you build up. And speaking of the interest that I mentioned just now, there's an interest deduction. That means that you have a tax benefit over the interest that you pay. Another benefit right there. Now, the downside of renting your home is, well, could be one of the reasons that you visited this webinar, that the rents are keeping rising. So therefore you want to buy a home to, again, have that stability. You don't have any tax benefits when you rent your home, which you do when you own your home, and there's no creation of wealth in your home. So those are the downside of renting your home and could be reasons to buy. Now, when you compare the two, you can see on the left, when you rent your property, in this specific situation, we use similar properties here, and the rent is approximately 27,000 euros per year, if it's in a rent of 2,250 euros per month. Now, if you compare that with when you buy the house, that is quite a strong comparison here, because the 2,250 euros per month, you pay 1,832, and this is with a quite high interest rate even, when you buy the house, and that would be your monthly payments. True, like I mentioned before, you do have a down payment to do when you buy a house, so that's your investment. And those closing fees amount to approximately 23,000 euros in this realm of amounts that you buy a property for. So then you want to know, when does it make sense to buy a house? Now, this break-even point, so when do you earn back those closing fees, that investment that you did when buying the house, is approximately 15 to 18 months. So that's, let's say, 1.5 to 2 years maybe. That doesn't mean that it makes sense, automatically makes sense that you buy a house after, when you want to live in it for 2 years. Usually we say, okay, let's start to think about when you know for sure that you stay in the house for, let's say, 3 or 5 years preferably. Then it starts really making sense to buy property from a financial perspective. Now, just to show you right here, after 5 years mortgage, you've repaid approximately 70,000 euros. So that's that creation of wealth, this equity that you build up in your property. So that's also a big difference when it comes to renting and buying.
Perfect. Thanks. Very, very useful information. And then you haven't even touched upon the fact that the house value might actually increase as well. So that's a nice little bonus to have. Yeah. Yeah. Perfect. I'll share a little bit more about the current market, because we get the question asked a lot of, is it a good time to buy a home? Well, you can see the trajectory here. Prices are increasing. What I always say is look at two things. First of all, look at your personal situation, right? What are you currently in? Are you currently renting a lovely home that has 3 bedrooms in a lovely location for a certain amount of money? What would you actually be able to buy for the amount of money you can borrow from your bank? Have a chat to the guys from Mr. Mortgage. They'll actually be able to help you out with understanding what you can borrow. Very, very, very important. Then compare the two, and then make a decision. Okay, hey, it's worth it to buy or not. Right. But besides that, we always say also have a look at the context. So why are the prices currently still increasing? What drives the prices up? Well, there's a few things. First of all, fiscal benefits. Fiscal policy done by the Dutch government the last 20, 30 years has made it quite attractive to buy a home and own a home. So what I'm going to describe now is what drives the demand up, and we'll talk a little bit more about supply as well. So first of all, is the tax exemption that Robin talked about. So what we're seeing is that a lot of people are putting the money that they're saving from the tax exemption back into the offer, so that drives the prices up a little bit. Interest rebate, Robin also talked about that. You can deduct your mortgage interest off your taxable income at the end of the year. So again, it makes it very attractive to buy a home. The third one is no capital gain. So let's say you buy a home now, you sell it in 5 years, you make a profit because the value is increased. You don't have to pay any taxes over that profit. So again, we're seeing that money go back into the housing market. Last but not least is the tax-free donation to kids. So parents are allowed to donate up to 100,000 euros to their kids if they actually use it for buying a property. So again, we're seeing old money go to the new generation and being pumped into the housing market. Low interest rates, of course, that makes it very interesting to get a mortgage. It's not free to borrow money, but it is cheap to borrow money, especially compared to 10, 20, 30 years ago. And then, of course, you have the high rents. And as far as what we're seeing currently is that because the housing market is becoming more and more challenging, what we're seeing is that municipalities, for example, Amsterdam, I read an article the other day that Amsterdam is looking to make a big portion of its housing supply, if you buy it, mandatory to actually live in it yourself. So what that's going to do is it's going to drive the rental prices up most likely, because the majority of the houses then that will be bought will not be used to rent out, but will actually be used to live in. Like personally, I think that is a good thing, right? Buy to actually live in instead of buy to rent, but it will drive the rents up. So if you decide to buy in a year from now, then most likely you'll face some higher rental prices than you'll be facing today. Then we've talked about all the things that drive the demand. Then there's a lack of supply, because the Dutch are renowned for not making their quota. They always have like these really cool calculations where they say, oh, we did make the quota, but in the end, not really. So what that means is that the demand increases quite rapidly, but the stock is not increasing as rapidly. The Liberal government said, okay, hey, let the market regulate itself, but a increase of demand doesn't necessarily mean a increase of supply as well. So all of these things combined drive the prices up. There are talks, for example, I think the EU is currently saying, okay, if you want to have the subsidies for Corona, you have to do something about, for example, the interest rebate scheme and so on. That might lower the amount of people looking to buy a home, but still that's not going to happen overnight, right? So you'll still be able to benefit from a lot of these things. And the Dutch are pushing back a little bit on some of these regulations. So I think that we'll see at least the next year or two, probably most likely next year, we'll see double digits. The year thereafter, depends, maybe single digits, maybe lower double digits, but I expect the housing prices to continue to increase in the next couple of years. Of course, that is not taking into account any global impacts. Like I'm not a macroeconomist, not even a micro one, but who knows, right? I think that what we're looking at now, all of these fiscal benefits and so on, we're not going to see any changes anytime soon. So what else would you need in savings before you start? So you know that the market will most likely go up a little bit the next couple of years. If you decide to buy, what would you need in savings? So I'm going to divide it into two groups. Robin already talked about if you're transfer tax exempt or if you're not transfer tax exempt. So I'm going to make it very simple. If you transfer tax exempt fully, then take into account you'll pay about 3% in purchase fees. If you do have to pay transfer tax, whether it's 1 or 2%, you'll spend 4 to 5% on purchase fees. What we've done is make a little list for you with the fees, and I'm going to highlight a few things. Look at the third column. The third column says yes or no. What does this mean? Is the amount that you'll pay for the services, is this tax deductible at the end of the year? So can you deduct it from your income tax at the end of the year? Some of these things are. The things that are related to your mortgage. The government's made it very attractive for you to kind of like get support when it comes to acquiring your mortgage and getting advice on a mortgage and anything mortgage related, because it is a tricky product. So make sure you talk to the guys from Mr. Mortgage to understand more about what you can do. So some of these tax costs are tax deductible, which makes it nice because you'll get 30 to 40% back at the end of the year. The transfer tax is the biggest chunk that you'd have to pay. And besides that, you'll pay for the services that you'll buy. These values might differ a little bit on where you decide to buy. In, for example, Amsterdam and Rotterdam, it might be a little bit more expensive versus Eindhoven or some other cities. So please be mindful that you have to have this money to actually complete the purchase of your home. You don't need it at the start yet, right? The majority of these fees will actually be due at the transfer. So when you get the keys of the property, at least the day before. So have a look into these costs before you decide to buy. Okay, a few more things. We'll try and give you a few tips to actually win in the current market. And the first thing is value, value, value. So let's look at this property. It's on the market for $395. The asking price is $395. And we're going to look at agent number one, who actually puts this property up for $395. Please note that the asking price is what the agent puts the property up for. It does not reflect what the market value is, and the agent is quite free to do anything with this asking price. So he puts it up for $395, but the market value is $415. What is the market value? That is the value in relation to properties sold in the past. So look at similar properties sold in the last 6 to 12 months. And then if you do the right calculations, you will be able to get and define the market value. This is important because the bank will give you this much money. Of course, if you do renovations, you can prove that you're going to increase the value of the property. You might get a little bit more, but this is in general what you'll get from the banks. Again, talk to Mr. Morgan, talk to Robin and his team, because they'll be able to support you with understanding this a little bit better. But this is the market value. Let's say somebody buys the property for $435. So we often get a question, how much should I bid over asking price? Well, this is the reason why we're actually sharing this example, because in this case, the difference between asking price and purchase price is about 10%. Difference between market value and purchase price is about 5%. Okay, this is agent number one, right? If we'd say, okay, look at the asking price versus purchase price, then we'd say, okay, 10%. But let's use agent number two. He's a little bit more opportunistic. He thinks that by lowering the price, he'll get more people in and therefore get a better offer. The market value, however, doesn't change. The asking price is the only thing that changes. Let's say somebody still buys it for $435. But the difference between asking price and purchase price is now 16%. Now, let's say we start using this narrative on that previous property, then you would actually be paying more for this property than you would need to. So what we always say is look at market value and don't look at asking price too much. What you can do use asking price for is to define where you kind of like search your properties in, right? Like if you look on Funda and your budget is kind of like 400,000 max, then don't go looking for properties that are 400,000 because most likely the value of the market value is already a little bit higher. But look for around the 350, 340K, right? So what we always say is look at the market value when you decide what to offer on a property. Don't look at asking price too much. We're happy to help you out with defining the market valuation. There's also a website called Cadastre where you can find some more information about it, but it is a bit of a puzzle. What is a winning offer? That's the next step, right? So you've defined the market value, you found a beautiful property. Now, how do we actually secure the property? There's a few tips here. Offer a good price, not always the highest price. If we look at the previous example, let's say you have about 20K in savings. You're looking at this property and you know that the market value is 415. If you go and offer 450, then you're not going to be able to actually secure the property because the bank is going to give you this, plus you have 20K. So technically you should only be bidding 435. Let's say you don't know the market value and you go nuts, you go even offer 460 because you heard that people are offering 16% over the asking price, then the letting agent will doubt about the fact if you're going to be able to move forward. So make sure you understand what you can offer and make it a realistic offer. So don't always go for the highest, the nuts price. Make sure it's a realistic price and not necessarily the highest, but something that you can actually afford. Then offer security to the seller. So what is that? The seller will want to know if you're going to move forward. He doesn't want to find out 1, 2, 3 months in of having your offer accepted that he has to start the process all over again. Especially selling agents don't like that. So make sure you give the seller the security. Share a little bit more about your personal situation, about your financial situation. Also, when it comes to certain clauses in the offer, one of the most famous ones is the finance clause, which give you the right to pull out of the deal if your mortgage doesn't get approved. This is something you can play around with. Maybe that's not the right wording because I do think that it's very important to get consent from your advisors before you remove a clause like that or before you remove a clause like the technical inspection clause. But making the seller more secure by saying, okay, hey, we're almost 99% sure that we're going to get that mortgage, so we don't need that finance clause. We'll give the seller security faster because once your offer is accepted and you've signed the deal, the seller doesn't have to wait anymore to find out if you're going to move forward or not because you're technically locked in. So give that security to the seller, but find out if it is something that you can do. Talk to Mr. Mortgage, talk to us if it's advisable to take, for example, out the finance or the technical inspection clause. Then also offer the least amount of hassle. I think the best example I can give is let's say the landlord wants to move out the 1st of February. He's bought a new house and it's not done yet. He needs some time to get it like delivered and refurbished and renovated. If you then ask the seller to move out the 1st of December, that's not going to sit well, right? So make sure that you understand what the situation is that the seller is in. Maybe he's got a property that he can move in into 1st of March, 1st of May. Maybe they're going through a divorce and they want to wrap it up really quickly. Maybe something happened or they don't want to put any time and effort into the property. Then, for example, when there's things that are not working as ideal, or things that you maybe not like cosmetically, only go for the really critical ones and don't ask them to repaint the whole place before you move in, right? So again, what we're trying to say is that you'll be competing with other offers. So if another offer is a little bit more attractive because they've taken out some of that hassle, then most likely the seller will go for that offer. Last but not least, offer a personal touch. Make sure that you, especially when you buy a property from somebody who's lived in the property themselves for a while, they will have built a emotional connection with the property. And if you're then competing with investors, then make sure you inform the seller about why you love the property, who you are, because most likely they'll actually go for you guys. Add a little photo, add a little text, and share why you love the property. Last but not least is due diligence. So there's two parties we'd advise to actually, well, one is actually mandatory, the other one is non-mandatory, but we advise to get in and help you out. What is it? Like the technical inspector, she'll come in to inspect the property and make sure you understand if there's any renovations or maintenance things that need to be done, short notice, long notice, and she'll just inform you about the quality of the building. The appraiser comes in because the bank will not give you a mortgage without a appraisal report. The appraiser comes in, takes a few photos, asks a few questions, does the majority of his work behind his desk, and then come up with a report. The banks don't like to see a report from the selling or the buying agents because, hey, we work for either party, right? So we're kind of biased in that sense. So they would like to have an independent party there. The appraiser is not really independent because you pay for him, but he has to play by the rules. And how do we validate that? Well, he has to send his report to an independent institute that checks if he's played by the rules. If he has, then it'll be forwarded to the bank, and then that is the value that the bank will give you. Question is, do you book these guys in before or after your offer is accepted? Maybe pop it in the chat. I'm very curious to see your answers. So do you book the appraiser and the technical inspector in before or after your offer is accepted? Some people are saying after. Some is saying, one is saying before. I'm not gonna hold attention any longer. The majority of you are right. So this is kind of like the timeline. It was a bit of a trick question for you, Sarah, but what the process looks like once your offer is accepted is that you have a bit of time before you sign a purchase contract. Some people think that they're locked into the deal once the offer is accepted. That is not the case. You're only locked in once your purchase contract is signed, and the 3 days that you can use to kind of like reconsider, wake up sweating in the middle of the night and think, oh my God, what did I do? You have the time to pull out in those 3 days. Afterwards, you can only use the clauses in the contract to pull out of the deal. Now, what is important is that you understand what the market value of the property is, because that will actually inform you about whether you're going to get the mortgage that you had anticipated or not. The same thing applies for what the quality and the condition of the property is. Make sure you understand this, preferably before you sign the purchase contract, because if there's any reason for you to kind of like negotiate a little bit because it turns out that, I don't know, the roof is leaking or there's something that you didn't pick up during the viewings, that you want to inform the seller, hey, please add this to the purchase contract. We want you to fix this. Or let's lower the purchase amount, right? So you have about a week to a week and a half to sign the purchase contract. Make sure you call these guys, or make sure you have us call them as soon as the offer is accepted, and get the reports before the purchase contract is signed. If not possible, try and get the reports in before the cool-off period, because that still offers you some leverage to negotiate. So last thing, we're going to talk about the timeline, and then we're going to answer a lot of the questions is as follows. So this is a bit of a skewed period. So from start to search to getting your offer accepted might take weeks, months, depends on what is on the market and how fast you get your offer accepted. Then you book in the appraiser and technical inspector. Then afterwards, you sign the purchase contract. Then the mortgage application is kind of like finalized, because the bank needs all the documents, and Robin and the guys need all the documents to actually finalize that application. Don't wait until that moment to talk to them. Talk to them already now. When you start to search, before you start to search, or in any period where you're actually, well, just talk to them now. I think it's going to be very useful because they're going to help you with prepping the documents. They're going to help you understand what you can borrow, what the interest rates are, what the other conditions are of your mortgage. I always kind of like to compare a bank to an old-fashioned retail shop. They come in, or you come in there, and they'll try to sell you the products that they have, right? They have like these beautiful grandma shoes, and like, oh, you should buy this. That suits you perfectly. But they only have a few products, right? And the guys from Mr. Mortgage, they have a range of products. So I compare them more to the personal shopper, stylist. They don't care what you buy as long as you know what you're buying, you're happy with it, and you look good in it. So I think it's very, very important that you talk to these guys as well, because they're going to be able to support you, and they have a range of different products, right? So they are able to pick between, well, I don't know, how many different mortgages do you have access to? You have 35 different providers. How many mortgages?
Yeah, so 35 different, over 35 lenders. So I think we're at 37 now. Each of them have 2, 3, sometimes 4 different products. So, well, then you're over 100 options out there, 100, 120 options. So yeah, there's a whole range for sure.
Yeah, so very important. Don't forget it. This is probably one of the biggest investments that you'll make. So spend some time in doing that due diligence. That one decimal difference in interest rate now and down the line can make a big difference. And what I mentioned earlier is that the money that you spend on Mr. Mortgage is tax deductible. So you'll be able to get some money back there. So don't go cheesy on it, and make sure that you make the right decisions. So where was I? So you have your mortgage application finalized, then the cool-off period ends. And then you have a couple of weeks to get the mortgage application approved. Mr. Mortgage does it much faster, so you should be in good hands with them. This kind of sounds like a very salesy talk, but there's a reason why we're doing this webinar together. I think that having the right partners around you when you go through a process like this is definitely very, very, very important. So it's going to make your life easier. It's going to make the stress much less. And in the end, you just want to make sure that you secure a home that you're 100% believer in. So yeah, get your support. Once your mortgage application is approved, then it's a bit of a quiet period, right? Maybe you can meet up with the seller to figure out, okay, hey, I would love to keep the curtains, or would you like to sell the couch? About 7 days before you get the final documents, you get a statement of completion. It's a final invoice. What we were talking about is you have the purchase price. On top of it, you have purchase fees, and then deduct the mortgage that you're getting from your bank from that. Then you'll have a certain amount that remains that has to be into the account of the notary before you get the keys. So before you get the keys, you first go to the property. That's the inspection date. You actually make sure the property is in the same condition as when you last saw it in. Sometimes when people move, they break things. Sometimes when people move, they see things. So you don't want to find out there's a big hole in the wall where that piano used to be, and want to give the seller the option to actually fix it. Once you've inspected the property, it's all good. You go to the notary, you sign the deed of transfer, which makes you the proud owner, and then you sign the mortgage deed, which makes you a proud lender. Then you get the keys, and then you have a couple of months, technically, I would say a couple of weeks, to inform the selling party about anything that is not working that should be working. So it's impossible to check everything on the day of transfer. If you move in, you start baking a cake, and turns out the oven broke down, and it should have been working, then you can inform the seller and technically hold them liable. The difficulty is that you have to have some kind of proof. So the longer you wait, the more difficult it becomes to prove that it was not working when you got the keys. So make sure you don't wait for 2 months, but technically you have a period of time. But again, you have to have the proof that it was like this when you moved in. Whew. So this is Ludo's favorite bit. I think, Ludo, you did a great job. I saw like the number of Q&As go up, go down, go up, go down, go up, go down. So great job there. Maybe you would like to take on this part.
Yes, please. Indeed. Finally, the moment that I can open my mouth instead of just having to type all the questions. We'll have a few frequently asked questions. We'll go from Robin to Kimo to Robin to Kimo, and then we'll also answer all the questions that are left in the Q&A. Like I said, first question for you, Robin. Is it possible to get a mortgage with a temporary contract, or even as a freelancer or independent business owner?
Great question, first off, but yeah, short answer, yes, definitely possibilities. To give you a bit of background, let's start with a temporary contract. So a bank will want to know that you can pay the mortgage, but not only now, but also in the future, and the foreseeable future, that is. So when it comes to a temporary contract, they will want to know. So for instance, if it's a year, a 12-month contract, so 1 year, they'll want to know from your employer if they're intending to keep you on after this term of your mortgage, of your contract ends, so if your employment contract ends. So that's where a declaration of intent comes in. It's a standardized form your employer can fill out and state without any legal consequences or anything. It's not legally, it won't hold up in court, so to speak. So they can just state, we intend to keep you on as our employer after this temporary contract ends as a permanent contract. It's a declaration of intent, so again, it's not legally binding on anything. And then you have all the possibilities in the world. Now, if for whatever reason that is not a possibility, there are still sufficient options to close a mortgage based on a temporary contract. Again, every situation is different, so if you want to know your specific situation, just let me know and schedule a call and we'll discuss everything. So in short, yes, temporary contract would be a possibility. When it comes to a freelancer or being an entrepreneur or a business owner, that works a bit differently. Again, a bank will want to know what the future expected income will be, but they can only be based on a history. So banks prefer to have 3 years history of your company. Doesn't mean that if you don't have 3 years history of your company or being a freelancer, that you cannot close a mortgage. The minimum is 1 year. So that means 12 months, 365 days. That's the minimum that you have that you need to have a freelancer or be a freelancer or have a personal company, your own company, to base a mortgage on that. And then longer, of course, you have more security because you have more history of your company. So definitely possibilities. And again, let me know what the situation is and we can run the calculations. So that's basically it. Temporary contract, no problem, can definitely be possibilities there. Freelancer, as long as you have 12 months minimum, then there are definitely possibilities to close a mortgage.
Thank you.
Perfect. Thanks very much for that. On to you, Kimo. What actually happens when I leave the country after several years?
Yeah, it's a good question. We often get that. Of course, you don't know where you'll be 3 to 5 to 10 years from now, right? Some of you might still be living and enjoying this lovely city called, or country called the Netherlands. Some of you might have relocated for work again, or just have moved back home. So there are a couple of things that you can do. First of all, of course, you can keep your home, but you'll have mortgage costs, right? It's allowed to have a home while not living in the Netherlands. You would still have mortgage costs and pay taxes over it as well here. Then the second option is you can rent out your home, but please be mindful that the mortgage that you'll get to own a home is a residential mortgage. Technically, if you were to rent out your property, you would need a buy-to-let mortgage or an investment mortgage. Sometimes a bank will give you permission to rent it out for 1 or 2 years, but please be mindful that is not a given. So talk to the guys at Mr. Mortgage again, talk to your bank if you decide to rent out your property. Some people don't do that. There is a risk involved if you rent out your property and the bank finds out. So be mindful of that. The third one is you can sell your property and you won't have any penalties, because if you pay off the mortgage that you have on your property, when you sell it, there's no penalties there. And of course, there's no capital gains tax like we talked about. So if you made a bit of a profit over your property, then you can put that all in your pocket or into your new home in your new country. So there's definitely some options. But yeah, if you want to know more about what you can do once you're there, don't hesitate to reach out.
Thanks very much for that. Back to you, Robin. Is it possible actually to rent out my house or part of my house?
Sure. You have to consider a couple of things. There are two different situations there, really. So you can rent out a room. Sure. You can have a roommate. That's no problem. Banks will not check if the person that you live together with is actually your romantic partner or anything, so that's perfectly fine. The most important thing is when you rent out a room is do know what the tax implications are, and so there's a limit to where the income over renting a room in your house is free of tax payment. Anything over that can be taxed, so make sure that you're well aware of that. And that's perfectly fine. When you rent out your whole house, that's a completely different story, because when you buy a property for your personal residence, you also get a so-called residential mortgage, if you will. That means that you use the property as your personal residence. Then the risk assessment for the bank is completely different than when you buy it and then rent it out, or when you buy it, living it, and then rent it out completely because you move somewhere else. Then, if you want to rent out your full house, then you have to have either permission from the bank. They only allow that when you move abroad because your company sent you there, but you also will be back within 3 years. So that's an exception there. In any other situation, if you want to rent out your house, you have to refinance your mortgage. That means it has to be an investment mortgage rather than a residential mortgage. The rules and regulations are a bit different. Interest rates are a bit higher, and usually you need a bit of savings to lower your debt because they don't finance the full amount of the property value usually. Again, it depends on your specific situation and the different lenders that are out there. But in short, you can rent out your room. When you want to rent out your house, it has to be, your mortgage has to be refinanced to an investment mortgage.
Perfect.
Cool. Then we're moving on to a question that will be applicable for you both. We'll start with you, Kimo. It's a question that I think a lot of people have. What impact will COVID have on the market, or did have on the market, in regards to mortgages and housing? And we'll start with housing for you.
Good question. I think that if we look back at when we first added this slide to the presentation, it was, I think, just when COVID broke out or just thereafter. If you would have asked me then, I would be like, let's see what happens, right? That was before there were any government regulations, subsidy schemes, like the world fell flat on its ass and there was no kind of like solution yet or any support yet. Luckily, the support came relatively quickly. And what we saw is because of the lockdowns is that home suddenly became very, very, very important. Suddenly, like you were in your, what is it, like 1-bedroom flat of 50 or 60 square meters with your partner, you'd have to work from home. Maybe you'd have kids or maybe you have a pet and it just drove you nuts. So some people decide, okay, we need a place, we need a bigger place. We're going to stay here for a little bit of time because the Netherlands is doing a pretty good job managing everything versus some of the home countries that you're from, or the other way around, right? But what we saw is that initially people got a little bit scared. We had some people back out of deals and so on. But 2-3 months thereafter, things started picking up and actually came back much, much stronger. There was also a lot of money flooding the markets. And what we saw is because of the schemes also from the central banks, like the interest rates, well, Robin talked a little bit about that in a few, but it still became very, very attractive to buy a home. We saw a movement out of the city initially once the vaccine kicked in and we saw more people being vaccinated. We saw that the companies were opening up again. And initially they said, oh, everybody can work remotely because they didn't really have any other options, right? But now we're seeing a lot of the companies, especially the bigger ones, returning on that and saying, okay, hey, like we would like you to come to the office. So we're seeing more people flow back into the cities again. Amsterdam and Rotterdam, The Hague are currently booming. What will the impact be moving forward? I think that some of the impact will be fiscal, some of the impact will be economical. I think that what we're currently seeing is we're seeing the inflation rates increase. The central bank thinks that it's for a short period of time. I am not 100% sure if it will be for a short period of time. But one of the things that I do know is that if inflation increases, certain assets will actually become more valuable, more attractive. Gold, for example, but also real estate, right? So what might happen is that we'll see the prices increase because of the after effects of COVID, right? There's a lot of production issues, a lot of supply chain issues. There's a lot of, well, talent issues, right? It's very difficult to find the right talent because everything exploded the last couple of months. Maybe that will wear off in the next 6 months, maybe not so. We're in unprecedented times. It's very difficult to gauge what the near future and the long future will hold. But if things will move forward like they are today, then that's going to have an impact on the housing market. Of course, we're also seeing the fiscal benefits that are currently linked to the Liberal government in the Netherlands. They haven't still formed a cabinet yet, so I'm not sure what is happening there. I'm not sure what they're doing. Maybe they're on holiday again. But if that might extend and we're going to end up again with a more liberal government, then I don't think anything will change there. The focus on COVID will still be very relevant. So I think the next 6 to 12 months, we're not going to see any major changes to the fiscal benefits. Are there any other things? Well, houses will stay and remain important, right? So suddenly the focus is on your home, and that's not going to change if COVID will remain amongst us, and we're going to go like up down in terms of lockdowns, working from home. The Netherlands or the Dutch government gave a press conference last Tuesday where they said, okay, hey, we want people to work from home again 50% of the times. So if that is not going to change to the foreseeable future or in the next year or 2 years, then I think we're going to see an increased or a steady kind of like demand or increasing demand on the housing market, which will again drive the prices up. There's so many different things that we can talk about, but I think that it has a net positive effect on the housing market. If you own a home, if you want to buy a home, I wouldn't necessarily wait too long. I've never heard somebody say, oh, I wish I didn't buy 5 years ago or 10 or 20 years ago. Maybe just after a crisis they did, the global financial crisis. But again, this is a completely different crisis. And I think that's where we're seeing the effects on the housing market already. So is it positive? Depends on where you are on the spectrum. I do think that a lot of the regulations that municipalities and that the governments will focus on will be mainly focused on people that actually can own a home and buy a home versus the investors, which they maybe want to demotivate a little bit, and also maybe manage the rental market. But I'll leave the rest up to Robin.
What rest do you mean exactly?
Yeah.
No, there's one thing when it comes to mortgages and that side of the COVID impact. So when it just hit, so let's say March 2020, we saw about 2 weeks, 3-4 weeks maybe. That time in, we saw a slight increase in the interest rates. So they were approximately 1.5 and they went up to 1.7. But that was just for the summer period, really. And then midsummer, end of summer, it decreased again. And ever since, they have been decreasing. To if you go very low and fix your interest for 10 years, that is, it's 1.35 to 1.4 right now. So it is, the interest rates are very low at this time. So it was a slight bump there. We saw a couple of clients that were spooked a bit as well, as we were all, I think. Makes perfect sense. But then again, people do want to buy and want to have a home, because you have to live anywhere, somewhere anyway. So that didn't really, we expected a larger bump there, but really the only thing for you as a potential mortgage client was the interest rate. True, the banks were a bit more picky, a bit more. They want to have a bit more security when it came to your income. So a bit more confirmation from your employer was required. So some banks want to have a confirmation that there wasn't any reorganization in the company within now and 6 months, for instance. Now, obviously, that's really hard to say. And again, it's an intention. So if it would be there, then that's perfectly fine in that sense. But they want to secure their investment in granting you a loan. But the most important thing in that regard is also how we did our job and do our job. We want to know for sure, not only that you can afford the mortgage now, but also that you consider that you don't necessarily max out everything that you can muster right now, but also that we look into the future. And that's the same thing for having a permanent or temporary contract, or, and maybe more importantly, when you're self-employed, have your own company. Do you think that you can withstand any bump in the road later on as well? So if anything, if COVID taught us anything, it's also that, not only just to max out everything that you have and everything will be fine, but make sure that you make your decisions on correct information and with due consideration of the future as well. So I think that's the most important thing. And then for the rest, Kimo pretty much covered it all already. So very well done. So yeah, that's about it.
Perfect. Thanks. One thing I maybe like to add to that is that we talked a little bit about supply and demand. Demand will most likely continue to increase. Supply, that is also linked, of course, to the regulations, but also the accessibility to, for example, materials, builders, and so on. And what we're seeing right now is that the supply chain also for construction is kind of like faltering a little bit to some extent, because, well, the containers are not coming from China as fast as they can. And this might have not necessarily an impact now on construction, but might have an impact in the next year or 2 years. Also, when it comes to jobs, of course, they need to find the right people to actually continue with construction. So let's see what that does. And if it actually means that we can continue to not make our quota or even make it less, or that maybe things turn around, that we'll be able to make or create more homes for people. So either way, I think that buying a home is still a good idea for now.
Alrighty, thank you for that information. We'll move on to Robin. I think we talked about the 10% deposit a little bit. What is actually the 10% deposit that I need to complete?
Yeah, very good question. Yeah, that's exactly perfect timing there, Kimo. So 10% deposit is what you have to down pay or secure at the notary at some point after you sign the purchase agreement. So you have the signing of the purchase agreement a bit to the left of the middle, and that's when you confirm you buy this property, and the seller confirms selling it exclusively to you. They cannot cancel anymore. You still have that 3 days cooling off period, which is very nice. But after that, you also committed to buying this property. Now, then we'll take care of the mortgage application. It will get approved. Then you have all the security that you can actually buy this property. If there wouldn't be this 10% security deposit, you could just pack your bags and drive into the sunset and never to be heard or seen of again. And then the seller has to start it all over again. So what is standardized in any purchase agreement when buying a property, it's a 10% security deposit. It means that 10% of the purchase price, so let's say you buy a property for 400,000 euros, then you have to secure 40,000 euros in a security deposit at the notary at a point in time. Usually that's around 5 weeks after signing the purchase agreement. That means that if it's at the notary and you hold up your end of the deal, meaning you actually move forward with purchasing this property, then this 40,000 euros will come back to you. So that's how a security deposit works. Now, if you don't hold up your end of the deal, meaning you don't move forward with buying this property, then this 40,000 euros will go to the seller, and then you are 40,000 euros lighter. Now, obviously, we won't let it get that far. It has never gotten that far with any of our clients yet, so that's not something that will happen on our watch. But that's how it works, just to make sure that you move forward with this purchase and you don't cancel all of the sudden. So that's how that works. Now, it could be that you saved up for this purchase of the property, but it might not necessarily be the full 10% of this for the security deposit. So there's also an option if you don't want to use your own funds or you don't have them available. You can also opt for a so-called bank guarantee, and that is where a bank or a financial institution will secure this 10% security deposit for you. Now, obviously, they don't do that out of the kindness of their hearts, but they will charge you a fee for that, and that's usually around 1 or 1.1% of the security deposit. So again, if you buy a house for 400,000 euros, security deposit is 40,000 euros, and then the cost for a bank guarantee for that amount is approximately 440. So that's, and obviously we'll discuss what the variety of options are there for you and what makes the most sense to you.
All right, thank you. Very, very important question, of course, that we have here is, we've talked a lot about our services, but how much do people need to pay for our services? We'll start with you, Kimo.
Yes, good question again. Where do all these good questions come from? So we have two different packages. We have the smart package, we have a complete package. The smart package is kind of like your virtual buying agent. What we do is we do an intake with you. We actually guide you through the process. We do a property review. We don't do the search or schedule interviewings or attend viewings. So that is something you'd have to do this yourself. But when you find a property that you're interested in, we'll actually kick into gear there. So we do the review, all the documents related to the property. Very important, we'll define the market value. And of course, we'll offer on the property. So we'll submit the offer drafted, of course, reviewed with you, and then submit it to the agent. If there's any negotiation that takes place, we'll take care of that as well. We'll review all the legal documents of the purchase contract, the transfer deed, and so on. If there's any third parties that need to be booked in, so whether it's a notary, an appraiser, technical inspector, we'll take care of that. And of course, we'll support you during transfer. All the fees that you see here are all in, no hidden taxes, no hidden fees, no hidden surcharges. So for Smart, we charge 2,500 euros for complete. This is the package where we actually attend and schedule viewings. So we schedule viewings, we attend the viewings, and we also attend the third party. For example, if it's a technical inspector, we'll attend those and we'll go to the notary with you. So we'll be holding your hands in that sense a little bit more. For this package, we charge 4,000 euros, 399.99. So this is what we offer. Again, no hidden fees, no hidden taxes, and we do require a down payment to start the process, but only if we have actually secured a home for you will the rest of the amount be due. That's us. Robin.
Yes, we have a fixed fee, depending kind of what you're planning to do, but you're in your first-time home buyer or moving home or buy to let. So when you buy an investment property, we have a fixed fee of 3,250 euros. We also work with a small down payment just to get the ball rolling and do our job. But what we do is when guiding you through a first-time home buyer, we'll make sure that you know exactly what you can expect. So we'll guide you through the whole process and make sure that you always know what you're up against, what you can expect in a timeline, and we'll guide you through the process in the sense that any time that you find a property that you might think is interesting and want to plan a viewing, or want to, and definitely when you put in a bid, let us know what the property is. Then we'll check in with Ludo and his colleagues to see, okay, what is the expected property value, and we'll set up a new overview for you. So before you do the viewing, and definitely before you do the bid, you already know what your mortgage would look like. And maybe even more importantly, because you already had some idea of what the monthly payment and the down payment would be. That's something that you probably already know, but it's very important to know that all the specifications of the property actually match with the options for a mortgage. For instance, if there's ground lease on the property, that means very shortly that the municipality is owner of the property, or of the ground that the property is situated on. You might have to pay an annual fee for that. If that's the case, so if there's ground lease, or erfpacht in Dutch, that decreases your mortgage capacity. Also, when you buy an apartment, you will be part of the homeowners association, and that has to conform to a certain set of rules as well. And that different lenders have different rulings there. So most important is let us know when you put in a bid or when you're very interested in a property, because then we'll check if it's actually possible for you to close a mortgage on this property. Obviously, that's something that we'll discuss with the guys from EHN. So then together we make sure that your bid is almost not passable, of course. So that's our fixed fee that we do that for. Again, it's tax deductible, and we'll guide you through the whole process again and make sure not only now, but also for the whole mortgage duration. So for the next 30 years, we'll also be your point of contact about your mortgage. If you have any questions, you can always reach out to us.
Thank you. I'm very curious what you look like in 30 years. You have these apps where you can kind of like put your face in, and then 30 years from now, you'll...
Let me try to keep it pretty much the same, I hope. Maybe a bit grayer around the edges.
Oh, perfect. Thanks a lot as well, Ludo, for posing the questions. So we have a final poll for you guys. We'd love to know from you what you thought of this webinar. How likely would you refer this webinar to a friend or a colleague? Did you miss anything in the webinar? And if so, what would you like to get more information on? This is also the time to kind of like bombard Ludo, if you have not already, because I saw the number of Q&As pop up. Just share your questions in the Q&A, and then we'll see if we can answer them as good as possible. So we're getting some good scores in. Nice. If you've scored us below a 7, then please let us know what you think we can improve. So I'm getting some good scores, 10s, 9s, 8s, 1 or 2 7s. So really looking good so far. Did you miss anything in the webinar? Some of you said yes, and then I think that what you'd like to get more information on is the buying process, the mortgage process, but the majority of you thought it was a very good webinar. Thank you for that. Again, what we try to do is make this informative for a broad range of people, right? So if there's any specific things you would like to know, then don't hesitate to call or hesitate to book in an intake with us. Again, we'll try and answer the questions that you have now as well. But again, sometimes we might have to go in a little bit deeper and make sure that we give you more information on those things. So don't hesitate to reach out and schedule a intake. Ludo.
Yes, sir. All right, let's move on to the Q&A where you have asked all the questions. Indeed, I answered most as I could already via the Q&A, and I saved up some questions where I think that could be interesting for the majority of the people here. Please, by the way, excuse my pronunciation of the names. I'm going to do my best, but we have people from all over the world here. First one is doable. We have a question from Catherine. It's a question for you, Robin. We were talking about how you are able to make a tax-free donation via the purchase of a home. Is it actually possible for parents to make this tax-free donation if they are living or holding currency in another country?
Thanks, Catherine. A very good question. Yes. So this tax-free donation option is within the borders of the Netherlands. So if the person that grants you this gift lives in the Netherlands, then the transfer of funds or ownership or something that is taxed, because that's a transfer of a commercial transfer is considered. But if the money comes from abroad to the Netherlands, then pretty much always the tax authorities are completely fine with it, because there's money coming into the economy of the Netherlands, and then they're very happy that happens actually. So then that won't be taxed. So there's no cap of this 100,000 euros. There's no necessary goal of purchase the property or purpose of purchasing a property. Though I would recommend stating it, if this is the case, if you get a grant or a gift from somebody abroad, to have it in the subject for the purpose of purchasing a property, because that helps with the mortgage application. That's something we'll discuss later on. But in short, no, there's no problem if it's in a different currency, or if it's from abroad, or if it's, for that matter, higher than 100,000 euros.
All right, cool. Thanks very much. Question for you, Kimo, from an anonymous attendee. I think this is a very interesting question. Do you think the makelaars, real estate agents, the associations or websites to search properties have any influence on the prices, either increase or decrease?
I'm not sure if I understand the question completely. So if I understand correctly, do any of these parties have, or that their influence results in prices increasing or decreasing on the market?
Yeah, or have an influence at all?
Yeah, I think so. I think that if we talk about the asking price, that is what the selling agents actually put the properties up for. They have a lot of freedom there. I know that, for example, in Belgium, you're only allowed to deviate about 5% from the market value, or 10%, whereas the price in the Netherlands can be anywhere from above the market value versus below the market value. So yes, I definitely think they are able to drive the prices up. I also know that and of course, like, their role is to get the best price for the homeowner, right? That's their goal. That's their role. Most often they also have a commission, so it's percentage based. So the more they sell the property for, the more they'll earn as well. So it's in their best interest, and I think that that's fine. I think that where the government comes in, and is that where they need to regulate it to some extent. Like, you can't ask a branch organization or the NVM or the VBO to kind of like regulate themselves. That's asking Facebook to regulate themselves. It's bullshit, right? It doesn't work like that. So I think that, yes, they're doing their job as best as possible, but that, of course, is driving the prices up. There has to be regulation to some extent. So what we're seeing right now is that the same thing applies with certain appraisers, is that when you get your property appraised, right, because they're benefiting from giving a decent value and also a market value, but because the market values are currently linked to properties sold in the last 3 to 6 months, and they have to have 3 or 4 reference properties. If everybody keeps driving the prices up, then their value is also going to continue to kind of like increase easily, right? Because, hey, you only have to wait for a month for for 2 or 3 new properties being sold for a higher price. So I think that, yes, they have an influence. I'm not sure if the platforms have an influence, like Funda or Prayers or anything like that. I don't think they naturally influence in some extent. I do think that Funda, being, well, partly owned by the MVM, does have some influence on where they actually spend their resources in terms of product development and innovation. And it's not in their best interest to create transparency in the market, right? Transparency creates, less room to maneuver and wiggle for selling agents. So I do think there's maybe like an indirect impact that they have on the market. And because they're kind of like a monopoly, right? I think that they have a large amount of power. So again, this is where regulation comes into play. I do think that the VBO went to court and said, okay, hey, Funda has too much power because they put the MVM agents higher and so on. I think the court waived that and said, okay, but they're not a monopoly, so they're allowed to do all these things. Again, this comes down to regulation to make sure that the market functions and works sufficiently. I don't think we can blame the agents too much. Although, of course, if there's shady business going on, then that is something that doesn't go according to their code of conduct. But again, you can't ask those parties to regulate themselves because it's in their best interest to make the most money in that sense. So yeah, I hope that answers the question a little bit. Sorry for taking a little time to understand the question. It's not a question we get very often, but it's a good question.
Indeed, it's an interesting topic for sure. Definitely. Cool. Well, thanks very much for that. Question for you, Robin, a question from Mario. Question goes as followed. Mario has a partner and well, they would like to buy a house, but at the moment his partner does not have sufficient funds or is not able to contribute to the mortgage, and they are not married, and therefore she would not be on the purchase agreement. His question is, would it be possible to, for her, if she is later on able to contribute, to be added to the purchase agreement or be added to the ownership of the property? Yeah. And also imagining the worst case scenario, if they at one point split up and want to sell the house, give her the proportional part that she contributed with. And the question is, does this have to be stated between us in some sort of contract? Does the bank have to be involved in these decisions, etc., etc.?
Well, a nice complete question and a lot of different aspects to touch on. So, well, first off, Mario, thank you for the question. That really helps a lot. I get this more often, so I think it's very good to address it. If anything, if I wouldn't have heard it before, it's also good to address it, of course. So, what happens if you want to, if you're together and you want to live in a house together, and actually you want to buy it together? There's no problem that one of you doesn't have any income at all. That's perfectly fine. So it's no problem to buy a house together where only one person has income. The bank is most concerned with that you as a couple can afford it. The mortgage will not be split into, well, this is the amount that you can borrow and this is what you can borrow. The bank doesn't care about that. They will just put it in one pot, and that is your mortgage, and you're both liable to pay for this mortgage. So my suggestion would actually be, if you're comfortable with that, to buy that property together right away already, instead of adding her later on. Reason why is that if that's the goal in any case, then you can do it right away, because she can be on the mortgage contract not having any income or any funds. That's fine. And if you want to add her later on, so buy a house alone and then add her later on, the thing is that she will be part of the ownership will be transferred to her, so she has to pay transfer tax over that. So in that case, that doesn't really make sense, because then and if there's an added value, so let's say you buy the house now and in 2 years you want to add her, then the property value has increased. So she has to pay a higher transfer tax, because she has to pay transfer tax over half of the value of the property. So there's a variety of reasons why I would say, okay, just put her on the contract already right away, because then that's what you want to achieve in any case, and then you prevent any hassle financially and administratively. Now, to follow up on the worst case scenario, so what happens if you do split up and you sell the house, and then what happens with the earnings? Because if if the mortgage was paid out of your pocket, then sure, I can imagine that you'd say, okay, sure, but then the increase of value is actually mine because you didn't, the other party did contribute. That is something that you can indeed, and I would advise to do so. Agree that set it up in an agreement, a contract at the notary. You can do that, stating, okay, we have this house now, and what happens in worst case scenarios? You can. There are a variety of worst case scenarios there. If you're not married or you haven't set up anything like that, I would strongly suggest to do so. For one, if you split up, what happens to the house? You can make an agreement there, but also what happens if either one of you passes away? Because essentially in Dutch law, it means that if your spouse or your partner passes away and you're not the official heir, then it will go to their parents, for instance. So it might mean that if the other one passes away, that you have to live with your parents-in-law. Now that might be very nice, might not be very nice. So if anything, make sure that it's well taken care of. You can do that with the notary, especially when you don't have any contract or any agreement there and you're not married. Make sure that you discuss this with the notary. That's it.
Cool.
Yeah.
Thank you.
Bring it, boss.
Thank you very much.
No worries.
All right, question for you, Kimo. We were talking about the NHG in the beginning, and the amount for the NHG limit is going up from 325 to 350. 355. Do you expect a spike on the housing market due to that rise?
Yes, good question. Maybe in the first couple of months, we'll see some more properties being bought for around that price. Normally it normalizes after that, but I think that because a lot of people already know this, and I think it is linked, please pardon my, correct me if I'm wrong, Robin, I think it's linked to the transfer date.
Yeah,
the NHG.
Yeah.
So what you'll see is that the majority of people that are currently looking for a home will have a transfer date in the beginning of next year, right? So if there would be a spike, I think we would have seen it by now. And maybe some people are not aware of this fact that it's linked to the transfer date. So you'll see maybe a small increase in the beginning. I don't think it's going to be substantial enough though to have a really big impact on what you're looking at. Again, we're talking about, what is it, 30 something K difference. So it's not necessarily the world in a sense.
Indeed, cool. Now I think during this webinar we haven't touched on the closing fees. Is that correct?
We did the purchase cost. So in one of the few, one of the first presentation slides, we talked about the closing fees,
okay.
3 to 4, 5%. Yep.
Perfect. Well, that was going to be my next question then. Then to Maureen, tomorrow the slides and the recording will be shared. So everything will be listed there and you can take your sweet time to look at all the prices.
Sweet time indeed.
Your sweet time. Then I do have another question for you, Kimo. It's a question from Maas. The prices seem to be increasing at an exponential rate. I agree. Maas is worried that the prices could be nearly doubled by the time next year, and that he or she will never be able to afford a property at that time. Should Maas raise to buy a property currently?
Raise to buy a property? As in raise capital?
No, as in the sooner the better.
Okay, I'll raise. Okay, cool.
I
think like first of all, I think doubling in a year is challenging, right? What we're seeing. So what you see often in the news is they compare quarters to one another, or they compare months to one another. So what you're seeing is that if, for example, the price have increased by 16% or by 90% or something like that, it's not the monthly increase, right? It's compared to the month or the year before that. So I think that, again, what we'll see is maybe double digits, max 20%, I think, but most likely it's going to be anywhere between 10 and 20%. Of course, also depending on the region, right? So you don't have to be afraid it's going to be doubled. I think that raising to buy a home is never a good idea, because what you want to do is make the right decision. So you don't want to over rush that. So do your due diligence again and take the time to look for a place. Because in the end, let's say you buy a home and you're not happy with the home that you've bought, like getting rid of it is not going to be that easy. While you selling it is going to be easy, but make sure that you recoup some of that money is not going to be that easy, because you'll have initial costs, right? Like Robin said, it makes sense to buy a home and at least keep it for 3 to 5 years, right? So again, don't rush into it, and make sure you understand what you're buying. I would just, yeah, I'm not sure what your budget is, but I would start, of course. I think that winter is a good time to actually find a secure property, because there's less people on the market. There's also less properties on the market, but a lot of people are just find it difficult to see through the rain, the snow, and the cold, and are not seeing themselves move in that time, even though that when you buy in the winter, most likely you'll move in spring or in summer. So I think it's definitely a good time to purchase a home. Don't race. Be considerate, be cautious, be understanding of what your boundaries are, but also what you're going to buy. It's a big investment, so make sure you do a proper job on your due diligence, and that you end up with something you're happy in, because you don't want to spend 400K on something that it turns out to be a bad buy, and because you felt like you were rushed, right? Also, and of course, like we are not, or at least I am not a financial specialist, right? So all the advice when it comes to the to pricing and everything is based on experience of what we're seeing happen on the market. um, if people would have asked me end of 2019, hey, what's going to happen in the next 6 months, I'd be like, hey, the price will continue to increase, maybe we'll see a correction in the mortgage interest or something like that, and then boom, COVID hit, right? So there's always a possibility that something might happen in the foreseeable future. So also be mindful that if you buy a house, make sure that you buy something that you enjoy living in, because selling a house for less money becomes a problem if you are forced to sell. Living in a house that is lovely, that you can just live in for the next couple of years and you can wait out any dip, is a good thing. So again, don't rush it and make sure you make the right decision.
Indeed, take your sweet time, I would say. Question for you, Robin. We're down to our final 3 questions. Question from Rio: what actually happens after the fixed interest period end?
Yeah. So first off, a short explanation about durations. A mortgage has a regular duration of 30 years. That means that you repay your mortgage in 30 years. In that 30 years, you can fix your interest. You do that at the start. So you purchase a property and then your mortgage will be taken care of. And you can say, well, I will fix my interest for 10 years. Then we know that the interest cannot change in that 10 years, in those 10 years, that they cannot change because you want to, but it can also not change because the bank wants to. So they cannot suddenly just increase your interest rate. It gives you some security. That's very nice. And you can choose whatever term you'd like. There's some impact there, of course. If you fix it longer, then the interest rate will be higher because you get more security there. So what happens after that term of 10 years ends, if you fix it for 10 years? Then the contract ends and you can do whatever you want, essentially. If you stay with the same bank, your mortgage will not be reconsidered or reassessed. And you can fix your interest for a new term, for whatever term you'd like, but that will be conformed to the interest rate of that specific time. So let's say 10 years ago, you closed the mortgage. Well, 10 years, let's say the interest rate was 3.5%, 4% maybe. You fix it for 10 years, and now you're very happy because the interest rates are drastically lower. And then you can fix your interest for another 10 years, but now for 1.4%, for instance. Same goes if you close your interest right now for 1.4 for the next 10 years, then after 10 years, we'll see, okay, what are the current interest rates of those time at that time? Do you want to fix it for another 10, another 20 years, or do you want to go to another bank, which you can easily do as well, because your contract, your rental contract, your interest contract ends. That means that you don't have to pay any penalty if you want to change lenders, so go from one bank to another. So essentially, if your interest fixed period ends, you can choose whatever you want to do. You can stay with the same bank and fix your interest for a new term, or you can go to another bank and see if you can get a lower rate there.
All right, cool. Thanks very much. Then we have our final question, also for you, Robin. Is it possible to repay your bank more than your first upon agreed monthly payments? And is there a cap on the maximum amount that they can pay back per year? Or is there a possible fee that you need to pay for that?
Yeah, very good question. So it kind of follows up on this 10%, 10 years interest fixed period. So within that 10 years interest fixed period, the bank expects a certain amount of interest income. Now, it depends per bank. So all of the banks allow you to repay up to 10% of the original mortgage sum per year. That's per calendar year, January to December. So again, if you buy a house for 400,000 euros, every year you can repay up to 40,000 euros with any bank. Now, if this is important to you and you want to repay faster, you can, because there are a variety of banks that allows you to repay up to 15 or 20%. There's a select few that even allows you to repay anything you'd like at any point in time. With any of these banks, the most important thing is that these repayments will come out of your personal savings or funds. So it's not allowed to repay it from another loan. So you cannot close another mortgage somewhere and repay your current mortgage, because that's refinancing and that's what they don't like, of course. So as long as it's out of your own pocket, the cap regularly is 10%. You can repay additionally per year. But if it's very important to you, you can increase that to 15, 20, or 100% even. The interest rate isn't necessarily impacted there. By the way, a small addition, if you do go for the max of 10% and you want to repay more than that, it could be that you have to pay a so-called penalty, but that means that the bank will reimburse what their loss of interest income. If that makes sense.
It does. Perfect. Thank you very much. Those were all the questions. It is exactly 12 o'clock, so I think we did what we...
Well managed, well managed. I love it when that plan comes together. Thanks, guys. Have a lovely day, everyone. I really hope this webinar was useful for you. Thanks a lot, Ludo, for managing the Q&A and being very helpful, I think, to a lot of the questions that have been asked. Robin, you've been a star as always. Thanks a lot for sharing your information on finance and mortgages. Again, please feel free to schedule an intake with us if you have any further questions. If not, then hopefully you'll be able to secure a home and be happy in your home. I have all the confidence that you will. We're, of course, happy to help you out. For now, take care. Have a lovely day. And it's Thursday, but have a great weekend ahead. Thanks, guys.
See you.
Thank you. Bye-bye.